I have a couple listings I want to go through. This one, it's in Pendleton, Oregon. Pendleton is a desert. So if we go, just look at the map real quick. Let's zoom out. This is desert of Oregon. Portland's over here. It's about a 3-hour drive, 2-hour drive to Pendleton. And then you have LeGrand, and then Idaho. It's a wasteland out there. So if we go and look at that property, so this is at 610 Southwest Goodwin Avenue in Pendleton, Oregon. It's nice because it gives us a good view. Some pictures, it looks probably the first unit is down below, second unit is up top. It was 2 units, 4-bedroom, 2-bath total, so it's 2-bedroom, 1-bath. So you have the entrance here with a living room, dining area, kitchen, utility, bedroom. Pretty standard stuff. They look good. They'll probably need to be filled. If we go, let's take a look at the listing. Investors, exclamation point. 2-story duplex in Pendleton, fully rented. Okay, so we don't have to worry about getting somebody in there. It is fully rented. Fully rented 2-bedroom, 1-bath units with kitchen, dining room area, living room, laundry hookups in each unit. Off-street parking, lower unit is newly renovated. Okay. Dun. Walking on property is not permitted without an appointment. All right, so we know basically where it is. It's pretty close to the highway. You take 84 from Portland and you'll be right there. Yeah, so we saw 4-bedroom, 2-bath. It has range, refrigerator, electric heater. It has a crawl space. The total structure is 1,600 square feet, so each unit's about 800 square feet. I mean, that is pretty small. But 2-bedroom, 1-bath, yeah, that makes sense. So it's a multifamily. It was built in 1993. Ew, okay. It is assessed for $240,000, and the actual rents is $1,810. So it's making $1,810 per month. Does it say how much it sold for? No, it does not. Okay, well, we can figure that out later. They're asking for $210. So let's go over to landpricecalculator.com. It's the tool I use for all my analysis. Price per door calculator that tells us how much we should pay per door for multifamily. Now we saw that it was $1,810 for 2 units. That is $905 per door. And so rental income for 1 unit is $905. Financing term, that's how long your loan is going to be. Expenses, it doesn't say that it's metered individually. I mean, you're going to be paying for a property manager unless you live in Pendleton. Let's say 45% because it looked pretty kept up. Number of units, there are 2 units. Interest rate, 7.75, probably 8 since it's in a riskier area. Down payment of 30%, and then a cash-on-cash return of 10. All right. Now we should be paying $62,000 per unit. Operating income is $498. The mortgage payment is $315 per unit. With after mortgage and expenses, our cash flow per unit is $183. With a debt service coverage ratio of 1.58. The debt service coverage ratio is how many times you can pay your mortgage per month. A bank normally wants to see about 1.25. That just says that you have enough income coming in to take care of the mortgage. So banks have a safety factor of 1.25 so that they can be sure that you're not going to default on the loan. Now it's a cap rate of 9.5, which makes sense for the area, and then total building value of $125,000. That is how much you should be offering for this building, which is half of what they were wanting. Little less than half of what they're wanting. The problem is when a listing agent is listing something, they're not doing any of this type of analysis. The only analysis that most agents ever do is how much did the neighbor sell, or how much did the house down the street sell. Comps are the weakest form of real estate analysis. I'm hoping with these videos that people start doing analysis, that they're able to do analysis fast, that they can show exactly how much a property is actually worth, so we can stop having these overpriced properties on the market. I mean, it's only been on the market for 34 days, but it's not gonna go. It's not gonna sell. It's gonna be on the market for a year, and then they're gonna take it off and hold on to it for forever. Let's look at the Pendleton's GIS, because we want to find out how much they bought it for. Because if they bought it for substantially less than what we are able to offer them, which remember is that $225,000, if they bought it for a lot less, then the IRR, their return potentially, is going to be a lot higher. And if that's the case, then they are more willing to take it. If we can show that we're offering them a fair trade, they're more likely going to accept our offer. And so here it is, 610 Southwest Goodwin Street. GIS systems are great. Most municipalities have them. It's either on the city level or on the county level. And this will tell you what the account is. So if you want to look up taxes, if they've paid their taxes, you can just search this, and then it will be able to, you'll get that information. So it tells us the address, the tax lot, city, the mailing name. So this is the person who owns it, and this is the address that they live at. So they're out of state, like they're on the other side of the country. They've never been to this property before. They're probably scaling down, saying, hey, we've had this property, we've never been out here, we don't intend to go out to Oregon. Let's look at the property search. So here in property search, they don't have any information. So they have no back taxes due. If we click on the account, it will tell us more about the property. The land value is $29,000. The property size is 0.23 acres. Again, this is the person, the address, owner, tax lot. Let's see, taxes. They are up to date on their taxes. We can look at the tax statement. And again, all of this stuff is this is publicly available. So they've been paying their taxes for forever. And let's look at sales history. This is what we've been looking for. Sale price. Nothing. I mean, honestly, they've probably just got it from a friend. Like, it looks like the county of Umatilla, yeah. I mean, county of Umatilla sent it over to Edward and Patricia Stith, and then Patricia Stith and Rita J. Oh, I see. Okay, so Edward and Patricia Stith sold it to Patricia Stith and Rita R.E. And then Patricia Stith and Rita R.E. gave it back to Patricia Stith, and then Patricia Stith gave it to Rita R.E. So really, they have no money in. They have no money in. Just assuming that it is $325 total sale price back in March 26th. Let's take a look at that. We go here, let's go to the IRR calculator. So that was March 26th, 1992. They bought it for $325. We are offering them, how much was it? Go back to our multifamily calculator, $125,000. Yeah, okay. So that is a good price. They're getting a 20% IRR. That means if you had your money in a savings account and the bank gave you 20%, that's what this means. So it is a fair deal. They're getting a fair deal. They're getting a 20% IRR. They're making a lot of money off of their initial investment. We're getting a 10% cash on cash return with all of our assumptions at the existing rent rate. We're not taking into account the potential opportunity that the property might have. No, we're banking on what is right now happening at this property. Right now, what is happening at this property is we're getting $905 per unit, and under these assumptions, that supports a value of $125,000. At that price, the seller is making a 20% IRR. So we should be offering this, and we should be telling them why we're offering it. We can give them a link to this, and that will input all of our assumptions so the realtor can see it, so the owner can see it, and then we can say, hey, we're giving them a 20% IRR. And so this is a fair trade. I would say that this is a fair deal. And if we can sell it to them like that, if we can give them the reasoning behind the math, then who knows? They might accept it. So I would offer them $125,000. I would give them the reason, and we'll see where that goes. Again, this is Land Price Calculator. It's just a free tool that I use for all my analysis in real estate. Great. Let me know if you have any questions. See you in the next one.